Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, which is what institutions and the biggest speculators in the market are doing, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is currently heading inside of a very strong level of previous monthly support, which is now turned resistance. From here, all this move to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected. And at the moment, as we have broken below the zone and we're currently retesting it as resistance, we could expect a deeper test of that zone, meaning that we could expect a bit more bullish price action to be created before then getting rejected to the downside. Going down on the weekly time frame, what do we have? Now, here on the weekly, it is quite clear that the market is currently in a range. We have the bottom of the range exactly here, where we have this previous weekly support, which is currently still acting as support. And at the same time, we have the top of the range, which is currently right here, which is a level of previous weekly resistance, again acting as resistance here, which at the moment is once again acting as resistance here, and we could expect the market to be heading towards the top of this range before getting a rejection to the downside, which in this case would correlate with what we have already seen on the monthly, because as we have already said, we expect a bit more bullish price action before then getting a potential rejection to the downside, which in that case here on the weekly would mean that the market would go and test the high of the range before potentially getting rejected to the downside. We can also notice how this was extremely strong demand and support on the weekly preceding this rejection to the upside, and that is exactly the level that the market tested and started to reject. Going down on the daily time frame, what do we see? Now, from a daily perspective, if we look at the price action that the market has been printing, we can see how we just had a very clear impulse correction, an impulse pattern to the upside, and then another impulse correction. And currently, we're getting another impulse to the upside. Now, I did speak about GBPUSD a couple of times in the past. I spoke about it when we were here. I explained all the reasons for which we could expect this move to the downside, and then from here, more bullish continuation, and that is exactly what the market did. Then we had this impulse here, and I explained once again all the reasons for which I expected a potential retest of this previous resistance turn support, and then a rejection to the upside, which again is exactly what the market is currently giving us. And by the way, I will link in description those previous analysis so you can go and check them out for more free education. Now, in a situation like this, what we need to understand is that if from here we will see more bullish continuation, what we would have is a move to the upside, red candle, and continuation. Now, this continuation would go and test the top of the range. And from here, there is a good probability that we will see a potential rejection to the downside. Now, if the market actually creates that move, the pattern that would be forming is the M pattern here on the daily time frame that would be created. And in general, after the creation of an M pattern, what we could expect is a good probability of seeing a rejection to the upside for the potential completion of the M pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, what we can see is that with the last reports, net positions have once again started increasing. We went from minus 23k net positions all the way up to minus 17k net positions, with 7k longs added with the last report. So it seems like once again we're starting to see a slow increasing of the net positions, making the pound stronger. This means that We don't know if the market will create this M pattern, but if the M pattern actually gets created, how we could be approaching a potential reversal to the upside for the completion of the M pattern at the neckline. Because, as we just said, if we actually get the creation of this M pattern at that point, it would be a good probability to see a potential reversal to the upside for the completion of the M pattern at the neckline. Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective, and they indicate that since the pound is strong, if we get the creation of the M pattern, we would have a good probability of a potential reversal higher. So the way in which we could be approaching it is, as usual, as I was saying, monthly, weekly, and daily combined with the COT data. Those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire course and mentorship program completely for free. In fact, you will have the possibility to get access to all the courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that you have the possibility to gain completely free access to the mentorship program by just following these easy 3 steps. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.